Happening today, another key inflation report will be released by the Bureau of Labor Statistics, with inflation continuing to tick up in the latest consumer price index. Wall Street is hoping for better news out of today's producer price index, which shows how inflation is impacting sellers. NewsNation's Alicia Nieves is live on Wall Street. Alicia, what are we expecting from today's report now?
Yeah, good morning, Markie. PPI is kind of one of the three main gauges we get every month when it comes to trying to understand inflation. As you just noted a moment ago, we got CPI earlier this week. That showed that prices did increase, but within line of expectations. In terms of PPI, we are expecting that producers have paid a little bit more last month. The expectation month over month is that we may see a small increase, about 0.2% month over month for headline PPI, and then about 0.3% if you want to go to core PPI. Year over year, we are expecting to see an increase about 2.5%. That would be up from 2.3% that we got last month. And markets this morning ahead of the open are kind of holding their breath, looking to open relatively unchanged. The Dow just fractionally higher, 0.2%. The NASDAQ and S&P 500 just fractionally lower, 0.2%. Listen, if we get this report and it shows that we, get a PPI read within expectations in line there or slightly cooler, which would be better for us, that would send markets up, and certainly the opposite if we saw PPI increase more than expected. So we're watching this really closely. Markets open at 9:30, PPI drops at 8:30. As soon as this PPI drops, we're likely going to get some reaction in the pre-market. The important note for PPI, and we talk about this with CPI, is that if we get a read within expectations or lower than expectations, this increases the odds and probability that come September, the Fed's going to make a rate cut or a more dramatic rate cut. Right now, that probability is sitting at 90%. So looking good for all those who have been calling for these rate cuts, Markie.
Yeah, we'll do a deep dive into that report once it drops. But Alicia, one specific product that's really caught our eye and attention is beef. It may only be mid-August, but some Americans, they may have to start saving up now if they want to afford those burgers for the Labor Day barbecue. What's the latest there?
Yeah. Or may have to substitute for hot dogs instead. Yeah, we got that CPI report earlier this week, and it did show a pretty significant and dramatic increase in the price of beef overall. I think the number is, 11.3% year over year is what we saw for the price of beef. If you go to ground beef, it's 11.5%, and steak, that's a hefty 12.4%. One of the main reasons is a growing reliance on imported beef and new tariffs on that import, right? One of the top sources for imported beef is Brazil, accounting for about 21% of overall U.S. beef that we import. And recently, as we've been reporting, Brazil's been slapped with that 50% tariff. USDA also predicting that beef imports are going to drop 6.1% as a result to 4.95 billion pounds in August of 2026. That's going to further reduce the supply, which further increases the price of beef. So not only is it higher, but it might be even harder to find come this, Labor Day weekend. So we've been talking a lot about the last couple of months potential price increases related to tariffs, and this is one of the sectors we're starting to see it, occur. Although obviously not broadly, but just right now, beef and a few other sectors, Markie.
Thank you for watching. Subscribe below and download our NewsNation app right now on your phone, and you will get fact-based, unbiased news for all Americans.